The mortgage application demand stalls as interest rates surge to the highest level since July. They surged. Mortgage interest rates last week rose at the fastest pace in over a year, throwing cold water on an already cooling demand. And this article is from CNBC.com. Total mortgage application volume was essentially flat for the week. And when we say total mortgage application volume, that essentially includes new purchase and then refi. So it covers both. The average, is flat for the rising just 0.5% according to the Mortgage Bankers Association seasonally adjusted index. The average contract rate, interest rate for a 30-year fixed rate mortgage with conforming loan balances increased to 3.23 from 3.08. So that's a pretty big jump, when you think about it. But again, said it last week, Ray, when you go historically speaking, under 3.5%, under 4% is still really good. So it's interesting to watch how rate sensitive these things are. The rate was 34 basis points lower 1 year ago, but that annual comparison has been shrinking steadily. Last fall, mortgage rates were 100 basis points lower compared to the year before. This is a quote from Joel Kahn. He is the MBA's associate vice president of economic and industry forecasting. Mortgage rates jumped last week on market expectations of stronger economic growth and higher inflation. And then he goes on to say the 30-year fixed rate experienced its largest single week increase in almost a year, reaching the highest level since July of 2020. Applications to refinance a home. So this is now the breakdown between the two, between refinance and purchases. Applications to refinance a home loan managed to eke out a 0.1% gain for the week. And this says we're just 7.7% higher than a year ago. So you can see those shrinking. It's getting closer, but still 7% higher than a year ago. And by comparison, refinance volume in the middle of December was over 100% higher year over year. And mortgage applications to purchase a home increased 2% for the week, and we're just 1% higher than a year ago. So that one is interesting to read.
That's one of the lowest. That's one of the lowest higher numbers that we've heard. Whenever we were doing the show throughout last year, it was like 20, 40, 50% higher than that was a year ago. I think.
And then it got down to 14, 13, 12, but now it's 1%.
Now it's 1%. So we may be seeing a slowdown in the buying.
Well, it's going to be interesting to see because right now, we're almost at the 1 year anniversary of our 2-week lockdown.
Yeah, good point. Yeah, maybe there were a ton of people that applied and tried to get into their home. We are going to see that impact. So basically last year, all of the, up 70%, up 80% is now going to be like, oh, we're down compared to last year. Yeah.
Well, remember what happened. We had all these things in escrow, right? And we went, well, wait, can I close? And there was we in California, we had forms that could say, if you have a reason because of the Rona, you can extend this escrow.
Yeah, we had those.
Or you can cancel. It became like a new contingency almost. So there was a weird, I remember it being kind of April 1st-ish. We were like essentially not shutting our business down, but shutting all of our contact database managers and all that stuff, shutting them down and kind of just going to, hey, let's just check on people. And that was about a month from now we started doing that. And then it just went crazy. I remember about the middle of April. So it'll be interesting to see what happens over this next month and a half.
Yeah, well, I think we may have to look back like 2 years to do 2 year, 3 year comparisons. Like what was normal versus what was the Rona world.
Because remember, everything paused. It was an immediate pause. The second we hit that first 2-week lockdown a year ago, which we're still in lockdown number 8 or whatever. Anyway, it was a pause button. I mean, at least that's how we discussed it. Let's just pause and see where we're at. And we also remember we didn't know if we were essential.
Yeah, that's true.
So
there were some agents around the country that weren't, sadly, but it was like somebody pulling back a hammer on a pinball machine, right? It's just like pulling it back during that pause, and then they let go, and it was like a pinball for the rest of the year.
Yeah.
Like Elizabeth Brodell said on Facebook, I spoke with a lender Friday who said that the rates were all over the place and that he was locking folks in as fast as possible because 2.25 is only an increase of like $60 a month. Folks are maxed out on what they're borrowing with a budget, and that $60 is making a difference, I guess, especially if they're having to go over asking, et cetera, et cetera. She also goes on to say, when I sit down with buyers now, we emphasize their budget, but now more than ever, buyers are pushing their limit because house prices are so up. And they look like okay, we're pre-approved for 250,000, so let's look up to 250,000. Almost right now, it's like, no, let's just look up to 240, because you'll probably pay 250. If we look at 250, you're going to be out of it.
Well, every time I get into escrow right now in the last week or two, let's call it 2 or 3 weeks, actually, when I get a buyer into escrow, I get that call from the lender. Can I lock? Should I lock? What do we got going? Like, it's how quickly should I lock? And should I lock for 30, 45 days and all that stuff? Because rates are just what we would call volatile at the moment.
Yeah, to say the least.